Hey everybody, what's up? This is Ryan Mallory, and let's talk about the stock market here. How high can it go? Is it going to keep going higher from here? The S&P sitting at 3324. Is it going to go to 4,000? I don't know. It may, but I think the market's probably getting a little bit overheated here. You look at it almost on every time frame. The daily, the weekly, the hourly. You take it from a quarterly, you take it from a monthly, you take it from a yearly. It's overbought on every time frame. So does that mean you short it? Does that mean you start shorting stocks? Does that mean you start buying SQQQ, which is a triple short on the NASDAQ, or you go and buy SPXU, which is a triple short on the S&P 500? No, it doesn't mean it. Just because it's going higher than you think doesn't mean you should just go shorting it. And here's the thing. The market, it can stay irrational a whole lot longer than you can stay solvent. Probably heard that. I wasn't the one who created that expression. I like it. I think it saved me out of a lot of bad decisions, man. But yeah, don't get too ahead of yourself thinking that, oh, it's got to come back down. That's what a lot of people do. They blow a lot of money. You don't want to do that. I mean, I'll be honest. You go back to August here, right? We were chopping around and we broke out a little bit. We came back down and looked like we might finally have a breakdown in early October. And then what did we do? We took off. We just kept on going higher and higher and higher. If you didn't jump on board, you missed out on some great profit opportunities. That's because so many people, they get into the stock market and they want to be right. They want to be right. They want to be proven right. They don't necessarily want to be on the right side of the trade as the market dictates. They want the market to be on the right side as they dictate. And when you do that, you're going to lose. You're going to lose every time. People are permit bears for like the last 10 years thinking that 2008 has to repeat itself at any moment. And it hasn't. We're 2008, it's 2020 now. So we're working on almost like 12 years since the Great Recession. 11 years since it bottomed. Look, you can let pride get in your way and you're going to get screwed. You can't let the pride get in the way. You can't let having to be right be your mantra. The sooner you admit that you're wrong and get on the right side of the market, the better off you're going to be. So the S&P 500, yeah, it's overbought. It just keeps rallying, okay? You got the Fed, you got the repo, you got all this liquidity being injected into the financial system right now, and it just keeps marching higher, man. I mean, you look at the NASDAQ. Technology's hot, man. You look at these things, and it doesn't mean that every sector has to be bullish right now because the market is overbought and everything. I do short some stocks. I'm looking for key opportunities here. I'm looking more to identify good opportunities should the market roll over rather than loading up the portfolio with short positions. I got like 15 or 16 stocks right now to the long side, and I got 3 stocks to the short side. So it's not a super bearish portfolio by any means, but there is a little bit of short positions there because I am trying to be a little bit prepared because I do think there's a good chance that we'll probably see a pullback at some point. I just don't know when we're going to see that pullback. It could be Tuesday when the markets resume trading. Could be December of next year after the elections are held. You just don't know. So you have to keep playing it. The trend's your friend until the end when there's a bend. Kind of corny, kind of a dad joke, but you get what I'm talking about. You ride that trend higher as long as you can. Take utilities. I would have thought that this thing would be selling off right now with this bullish the market's been. No, money's pouring into utilities. This is like 7 straight days of higher prices. You take like NEE, just continues to blaze higher. But then you take energy, right? Look at energy. Energy doesn't look good. I got out of one of my energy stocks today, SU. It's rallied up for me. I made about 3%. Would have liked maybe to walk away with the 6 or 7 that I had earlier in this week, but no, it broke through some resistance. It broke through, or some support. It broke through the 10-day moving average. I went ahead and got out of it. See ya. And it was mainly because the sector's starting to look bearish. You got this little short-term topping pattern. It could come back down. But outside of energy, there's very little that doesn't look bullish right now. Even staples, even real estate, telecom, they're kind of all doing great, even though those are more of like your safe havens when the market gets dicey. So what's some of the trades that I've been making lately? Let's check out this one. This is by far my favorite one. So this is what got me into it here, okay? We got in it on January 9th. This was the 7th here. I saw this big basing pattern here. It started to show the signs that it wanted to break out. You can see here it broke out initially. I didn't get in on it that day. I was kind of having some regrets there that I didn't, but The next day I did get into it. I got into it at like $87 and change. Made a little bit of cash that day. But then, man, look at this thing. It just kept on ramping, okay? And then I got out. I got out at like 119, right about there. There was about 135. I could have gotten out for as much as a 50% profit. I got out for a 37% profit. The Fed decided to halt the stock because of the circuit breakers and everything else. It was overheating. Cool. That was great. It's kind of screwed me out of some profits, but I'm not here to make excuses because you can see the next 3 days. What did it do? It traded sideways. So it hasn't done much. I think it can still pop higher from here. It's trying to hold that 5-day moving average a little bit below it right now, but still you get the gist that it's consolidating around it. And it still may go higher. I may be getting back into it, but overall, it needs to be a really good quality setup because it's it's a very volatile stock. It's probably one of the most volatile stocks you'll trade, and I want it to be a really good trade setup coming out of a base off of very oversold conditions, like what we saw here, squeezing those shorts big time, and that's what we got. Huge volume, really good setup, 37%. I actually took half off. I think on one of these days here, I think it was like around like 95, 96%. I took about 8% off the table actually, and then it went up to 37%. So overall, one half about 8%, another half for a 37%. Really good trade. But the fun doesn't stop there because on the 10th of January, I got in to Shake Shack, and I like the place. I like the burgers, man. It's good stuff. Hey, I got out right here for my initial profit at around 71.27, I think it was, and 71.27 was about a 12% profit, and it's just kind of hovering at it right now. So it hasn't done much since, but I still have a half position left. Want to see it get into this gap and make a run into it, sell it there. And these are all trades that I've notified the members of the Share Planner trading block. Talk about it, these trades. Talk about them every day, do live video casts. I put them out in the evening newsletter the night before so that you know exactly what I'm targeting for the next day. RCL is another one. This one's the longest one in the portfolio right now. I've had it since November. It's up about 16%. I think I sold the first lot for like 12% or something like that. And so far it's just consolidating here. I think it's getting ready to break out. At least it sure as heck the chart shows it. It's breaking out of this consolidation here. Should keep going higher. Now, look, I know I'm tooting my horn and everything like that, but what I'm doing is trying to show you how I'm managing the risk. Get the big run up, take a little bit off the table there, let the rest run. Let's take a look at a stock that I took about a third off the table on today. I don't know. I saw this and I was doing this on the live stream and I noticed this channel that I've been trading in. Hadn't noticed it before. I probably should have. But look, man, it's touching that declining channel and it's not really pushing through it. It's maybe outside of it a little bit, but not aggressively pushing through. Then you also have a gap fill here. So there's two levels of resistance here. I'm a little bit nervous about that. I still think it has the potential if the market keeps on rallying, and that's always questionable. But if it does keep rallying, there's a potential that it could go up to between $55 and $60 a share. Get up into this area right up here. Be beautiful, right? But in the same note, there's two levels of resistance that it's currently trading with. So instead of just going ahead and taking all the gains off the table and saying, okay, I'm not gonna risk anything at this point. I took a third off, sold a third, gonna let the other 2/3 ride. Now come Monday, if the stock struggles to break through, maybe I'll take another third off and let the final third run on its own. But that's the strategy going forward with Etsy. I think it's a pretty good one. We'll see. And finally, I'm going to bring up this one. And there's a plenty of other ones. Look, I got I traded GGG last month for about 12 or 10%, CNQ for about 10%, Netflix back in December for about 12%. I'm just going down the list here. Uber up about 16% on that one right now. Baidu, that one was about 10 to 12%, I believe. Yeah, 9% on one, and then I sold the other half for 11%. And then you have this one, Visa here, right? This one's already blown through my target price. I'm still in it. I took half off the table when it hit my price target, but it's still pushing through. It's at 204. My price target was at 200. Look, I didn't expect it to go on this 8-day rally here, but it continues to march higher. I have a 5-day moving average that's guiding it right now. If it closes below the 5-day moving average, I'm going to get out of it. Just not going to risk it at that point. Huge rally. Look, I was shocked that it went up today. I was not expecting it to really. I was hoping, okay, maybe we'll get some consolidation here for the next few days and maybe get one last rally before the earnings. No, it just keeps on going. So cool. I'll take the profits, man. But yeah, I'm on pins and needles with this one. If it closes below the 5-day moving average, out. That's going to do it, man. The market. Listen, play it for the obvious direction that it's going right now. It's going up. Keep playing that because you don't know how long it's going to last, and you don't want to continue to leave opportunity on the table here. You want to play the trend. The trend's your friend, right? That dad joke, the trend's your friend until the end when there's a bend, okay? Keep playing the trend, okay? Don't try to be a hero. Markets don't give you extra credit for effort of trying to be a hero, shorting the market at all-time highs. It's just going to rip you to pieces when you do that. You need to wait. Before you start shorting the market, you need to wait for there to be some kind of confirmation that says, okay, this is the time when you want to get very bearish on the market. Right now, guys, I'll take all these lines and everything and just show you the chart on this market. Yes, the rally since October, phenomenal. Okay, it may not keep going up like this any longer. But is there a sign on this chart that says, hey, you may want to start shorting the crap out of this market right now? No, there's none of that. So don't try to be the hero. Don't try to act like, hey, I got short before anybody else. The market doesn't care about that. There's still, if the market does fall apart starting Tuesday and we go into a year-long recession, then guess what? There's going to be plenty of opportunities to short the market. You don't have to do it right now.